$50 is the big news out in the world right now regarding Palantir. So thanks again first to Amit for posting Bank of America's report on why they justified this $50 price target, and we also get a glimpse of the numbers here on why they think that. So let's just dive right in. So first, as a summary of their sentiment, the key changes provided are their price target, of course, changed from $30 up to $50, which is the highest right now among analysts covering the stock. However, for 2025 and 2026 estimated revenues, this has stayed pretty much the same with 3.48 and 4.44 billion respectively. Now, for their summary, the general AI market is still being totally underestimated in their eyes, and their example of cell phones being analyzed by a consultant back in 1980 for AT&T grossly underestimated the potential of that technology, where they estimated around 900,000 users or so for 20 years later, but it turns out it was over 100 million people at that point. So essentially, Palantir will greatly benefit if this turns out to be a similar case for AI, which Bank of America believes. Now, going a bit further into their history, they note how Palantir has been working on real and complex problems since 9/11 in the early 2000s. People do also tend to forget they are a company that's been around for more than a couple decades at this point, even though they only went public via a DPO a few years ago. Essentially, they believe Palantir's approach with being mission focused while being cognizant of security in their design of their products is what makes their complex and iterative approach able to let decision makers determine where, when, how, and what they can implement as intelligent solutions. And then further talking to about Palantir as a company, their culture matters. They don't have a typical sales approach as we've all seen, and we know when they tried to implement something similar to that, we didn't really see much results come from it. But with the engineers playing a key role now, and we think of AIP boot camps and FDEs, that scalability and profitability was always something critics pointed out, and even calling them a consulting company at some point where their products can't scale, even though it was pretty obvious their software has been able to demonstrate otherwise. Bank of America is in the same boat, disagreeing with these critics, where they believe this approach has actually helped them get stronger pricing power, and with this value add approach first, customers are willing to shell out because they can easily see the ROI or benefits of utilizing Palantir's products, and it's made easy for them. And you have to remember, this is all while being profitable, so against their peers, Bank of America sees this as a huge key differentiator. Now, onto the next page, we get a bunch of their estimates out to 2026, but I think it's important to note the investment rationale that they provided on the side. They see Palantir as a beneficiary of rapidly growing demand for artificial intelligence AI platforms in both commercial and government end markets. Palantir's dominant position in the AI-powered software market, differentiated end-to-end, ontology-powered and highly secure solutions, and first-mover advantages should support revenue growth and improving profits in the midterm. Increased urgency on modernizing military and intel capabilities may provide significant opportunities for Palantir. Now, onto the business performance, they are estimating increased performance, especially around their retention capital employed and operating margin, while seeing significant boosts in their free cash flow. While the quality of earnings, they also see some key ratios staying stable, like the cash realized ratio, asset placement ratio, while seeing an increase in their tax rate due to their growing profitability, which is actually a good thing. And the decline in net debt to equity ratio, considering they believe Palantir will still be smart around avoiding borrowing money. And this leads down to the income statement, where a lot of people are curious. Bank of America believes they will be bringing in $2.75 billion for the full year of 2024. That's similar to guidance, while increasing to between $3.4 billion to $3.5 billion next year for 2025, and then going further to $4.4 billion in 2026. Naturally, they believe their gross profit will also healthily climb alongside that, and their EBITDA and net income continue to expand too. Then down to free cash flow, they believe Palantir will be bringing in almost $1.5 billion in free cash flow by 2026. This would be a ginormous jump and really be an expansion of where we are today, as you can see that huge jump between 2025 and 2026. They probably believe this is a sleeping giant where this expansion will take place later in 2 years, maybe as they build up more customers, more use cases, and then eventually see expansion of services, which should lead to higher revenue. And then for the balance sheet, they think Palantir will continue to accumulate assets, but remain in no danger of needing to take out any short or long-term debt. So overall, I wouldn't be surprised actually, at least trend-wise, what they're doing here, but it remains to be seen if they can hit these numbers and the quantity. Now, going further, they described their thoughts on S&P inclusion that was just announced last Friday. They believe this will be highly beneficial in regards to Palantir stock volatility. They think the inclusion would attract more institutional investors, both passive and active. And then beyond lower stock volatility, they view the inclusion as a watershed moment of who would want to look at Palantir more closely, which I've mentioned before. It's another checkmark that makes people more likely to do a double take on why Palantir made it into the index. And they do provide why they think there's low institutional ownership still persisting for Palantir today, with first the DPO or direct public offering. They did not do an IPO that someone could have made a lot of money on, and also how it affected the share structure and offering of the shares onto the market for investors to purchase. Also, the multi-class share structure common with tech companies to keep voting control, even if the ownership is very tiny. They note the 0.05% ownership with 49.999% of voting power. Some would argue on either side the benefits and the cons, but for institutions at least, it essentially means you participate in the upwards and downwards directions of a company when you own it, but you don't have control to vote, and this is a real risk to some people. And then they point out historically, this wasn't even the case for Palantir or in the cards for Palantir to be even in the index due to the share structure. But until April 2023, and also we saw Alex Karp's letter putting out here noting the significance of this event where their share structure would not ding them from getting into the index. And they still note institutional ownership has been increasing still slightly. It just isn't the same level as the S&P 500 members that we see, as well as the top 5 institutional holders today are 20% of the ownership. So there's room for other players to get a piece of the action. And they also provide a couple visuals here, this disparity. Palantir is the yellow line and it's completely below even the lowest S&P members at around 45.8%. So institutions still have room to jump in if they'd like, and some even see this as an opportunity to take advantage of the potential buy demand this could cause getting into the index. And then on the second visual, they note how Palantir's ownership has changed over time. Really staying stable, honestly, with retail ownership since back in 2021. But with the smaller insider ownership, the institutions have picked up a few percentages, at least compared to all-time lows in the low 30% range. Then they focus on the US and commercial government business and what Bank of America believes Palantir has been going for. And that's with the increased focus on making ontology interoperable to other software and really being able into that layer to play with other legacy systems, but also continuing to build a stronger developer community, partnering with third-party services like the systems integrators they know, and just becoming the common data operational system for the US government, as well as large commercial enterprises. So government-wise, they note that the real concern here from the DoD is vendor lock-in, which you could argue is good for Palantir, but you don't want to make it so strong you upset your customer. So being able to achieve a competitive multi-vendor offering is still in the cards, but they still see Palantir as the required infrastructure to set up that ecosystem that's hard to replicate and implement, where before government would have to depend on system integrators. And with Palantir really being that infrastructure play, or trying to be with the newly launched Mission Manager solutions, they see them really running the ecosystem, which keeps this open and competitive for other players. And then commercially, this also applies. Folks want to be able to scale, and Palantir has a platform that can provide upsale opportunities for them. And even if other vendors can come in, Palantir's ontology allows this data infrastructure to be better for improving decision making. And this isn't for big companies only, but also small ones trying to build on top of Palantir as their operating system. So we'll see over time if some of these actually scale up even bigger. Then we get a few visuals on how they see the products all working together, and it's really a big ecosystem of opportunity for Palantir to deliver value to clients, from the data that they're holding to the security and implementation, as well as how they deploy updates. Even if they are only utilizing a certain area of Palantir's products, this provides the possibility of expansion and the ability to compete even harder with adjacent systems within these customers. And that's of course to perform certain functions at these companies, and maybe even taking a holistic approach might be better. Now, for their big picture thoughts on their fundamentals, they truly believe cash is king, and their free cash flow margin is going to help drive this demand for Palantir. Palantir continues to pile up cash, and this financial strength is a big differentiator in their eyes. Both government and commercial customers care about the vendor survivability. They don't want to be stuck with a legacy system that no one can maintain or disassemble or just even try to understand. And this is why Bank of America pushed their price target to $50. They believe that Palantir can pull off some big numbers, but also on the qualitative side of their business, they are in a leading position on AI implementation, a wide competitive moat, and a strong mission-oriented culture that just gets it done. And this is based off their 1 year forward valuation to reflect 2026 estimates that we saw before. So, with that implied valuation of $116 billion, as they note, Palantir would be in the top 100 companies in the index, which would be huge. Now, I always have to give a warning. This is an analyst estimate, and it doesn't mean this will happen in the timeline they say, not investment advice. Faster or slower, we know that the market can get ahead of itself and also get overly pessimistic over time or overly excited. So I'm curious to know, are you in agreement with Bank of America's $50 price target, or what would you think happens differently for Palantir? Let me know below, and I'll see you in the next video.